Hi, John from York Bay Financial Partners, looking at investment markets. Another big test for the US market this week with the latest jobs data coming out at the end of the week. May's reading was much better than the rather weak figure in April. May showed an increase of 559,000. Reading is expected to be around 690,000 jobs created. Now, if that is obviously the case, then the US economy really is pushing on at a pretty good rate, and certainly the reopening is helping the jobs number, which is still way below pre-COVID levels. Interesting to see the banks have just gone through the latest stress test from the Fed. All of the banks passed pretty convincingly, and that has now seen most of the sort of big major banks increasing the dividend payout. Morgan Stanley doubled their dividend payout, and that's it should be some pretty encouraging news out there, especially for investors, and really should give the sector a bit of a boost. But also as well, clearly shows that the banks are in pretty good state. They've got very strong balance sheets, and that should be pretty good for the economy going forward. Facebook as well, the latest company to trade over $1 trillion. So despite the slight uptick in sort of COVID cases of the Delta variant sort of sweeps through the US, the US economy looks in pretty good shape. Reopening is going on track, but more importantly as well, the vaccine rollout is very well established now. Now, obviously, that increased economic activity is having some pretty good impact on oil as well. That's holding above that sort of $70 on WTI. The UK faces a bit of an interesting dilemma, really, because again, the sort of Delta variant now is sweeping through the UK, and sort of a huge increase in number of cases. Also, a little bit of increase in hospitalisation as well. But the Prime Minister Boris Johnson is still adamant that the economy will fully reopen on July the 19th. And indeed, a major sort of test for that, is the sort of latest sporting events taking place, Wimbledon and the sort of Euro 2020 football tournament, where they have got increased crowds going through. Likewise in Europe, big sporting events. In France, you've got the Tour de France. Plenty of spectators out there, not really a lot of social distancing, and it'll just be interesting to see over the next sort of couple of weeks if there is an increase in cases going forward. Now that's a really in stark contrast to Australia, where you've had a sort of a pretty big outbreak. Started in Sydney, New South Wales, but it's now really spread to a sort of Queensland and Northern Territories, Perth. And it is this highly transmissible sort of Delta variant that's really sort of sweeping through the country. And many states now have gone to sort of lockdowns, albeit only for a week or so, but it's still sort of impacting the economy. The most severely hit are, Sydney and New South Wales. That'll be in lockdown for a couple of weeks. Although interesting to note, so far, after the initial sort of spurt and boost in numbers, it seems to have sort of plateaued a little bit by sort of coming in between sort of 10 and 20 new cases a day, which is not quite as aggressive as authorities first thought. Now here in New Zealand, seem to have dodged a bullet again with the infected visitor visiting Wellington over a weekend. Wellington went into a sort of an increased alert level, moved their alert level up to level 2. But so far, with all the testing, there's been no cases in New Zealand in the community. So that has now seen New Zealand revert back to level 1 in Wellington. And again, the economy is pushing on a reasonable level. Certainly, first quarter GDP at 1.6% was a big surprise. Most analysts and economists were expecting a sort of a flattish number, if not a slightly negative number. So what does that do to interest rates? Now, potentially, before the sort of stronger GDP reading, you were looking at sort of 2023, 2024 before any rate increases. That's now been brought forward to maybe sort of mid-2022. And there's an outside chance you might even see a small rate hike at the end of this year, sort of November time, 2021. The issue is obviously with the central bank, with interest rates at incredibly low levels at 0.25, to take it up to 0.5, so that's just a quarter point increase. That's a 100% increase on the OCR. And obviously with the Trans-Tasman bubble now being closed, that sort of hit the tourism industry, especially the ski fields down south, which we're really looking for a little bit of a pickup with the Trans-Tasman bubble and sort of Australian tourists coming over. It's been revealed as well that potentially we could be running out of the vaccine by sort of as early as next week. Supposedly there is a new shipment coming in, but again, it's getting sort of pretty tight. And that's just putting further pressure on the government because, at present, their sort of targets for getting everyone vaccinated by the end of the year really do look unrealistic. But in this low interest rate environment, if you are looking for income, there are alternatives out there. And if you're interested in discussing what is available, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. And we look forward to speaking to you soon.